capture the whole thing because.
If only PPT, so we put like that. Only
So ideally, which side of board I should use? This side of board?
Yes, ma'am.
This side of board I should use?
What setup? Yes.
Alright, so how exactly? You all can check this side only, no? At least I will concentrate on that side. Now see this 30-hour mechanism that we are opting for the subjects like IFM. Definitely, I am not in a position to tell you that I will be completing 100% of the syllabus. If you really stick to that 30-hour idea, 100% syllabus with proper details, it is not possible. Fine? We cannot do that. Yes. Please sit on this side. So now, what exactly is the plan under which I am thinking of helping you in understanding this particular subject is definitely all those chapters which are conceptual, I am going to provide you with the reading material as well as the assignments. Fine? Because with that, anyways, you will be going through it, you will be doing the assignments, or to an extent, you can cover those types of topics. Right? Secondly, I want any of you to take the initiative of creating. Sir, it's there.
Good morning, sir.
Good morning.
Sir, we have fixed it like that. So I have shifted the class this side, now it is possible. We are actually managing that way. Fine, sir? Fine. So, what exactly I was telling that I want any one person to take the initiative of creating a WhatsApp group exclusively only for IFM. Fine. What will be my practice that daily I am going to tell you. Abhi, for initial 2-3 sessions, I know I have to go with it slow because I really need to help you in getting the grasp of the subject. So I cannot bombard you with everything in one go. That is not possible. But what I am going to do is, I will be sharing the material like when we are talking about the first. Have you received the syllabus from the academics? You have not received the syllabus? Alright. Palma, can you go there first word and that first word to open? No, I think syllabus is like there. Just read international financial. Six modules are there, but what is there in the module, we need to tell that also, no?
We have to follow that 14 and 15, 2014 and 15 calendar, right?
That will be we are following also. Your sake. Please occupy this. Now related to your first module in international financial management, it basically talks about how this international monetary system came into existence. Because there have been a lot of transition that we all know that from the old standards we have shifted to the idea of exchange. Initially it was Bretton Woods system, then we have got into the flexible and floating idea of the exchange, and now finally we are talking about how presently the exchange is happening at the international level. So your first module is completely about that. Now what exactly I am going to do is, I am definitely going to share the reading material with all of you. With that reading material, I am going to share one assignment today itself. Fine? Because the assignment that I have created is something very simple. Actually, it is a case and a video that you are supposed to go through, which is going to give you a clear understanding on this particular transaction which has happened from the attendant system to the present scenario, and how various countries have participated in managing this international exchange idea. Because from the European setup, we initially we have got a different kind of participation. They were having their own exchange mechanism which they were following besides what was being followed in all over the world. Now actually it is common for all. Yes, please. You please shift one table and chair or occupy seats here. Either better or your table.
She's perfect.
Acha, you sit there. No, इसमें आप shift. And you sit like this only. You can arrange one more row back side, but I think this only is going to fall good for all the classes. So sit like that. Alright, so this is what going to be your first module that you have to study. Then in the second module, which is again very very important from any particular country's point of view. Fine. So from any particular country's point of view, and like if we talk about India, India is, you found it? Smart. Alright. So the first module that we will be taking up here, it is going to be about evolution of global financial management. It is. So it is evolution of international monetary system, then bimetallism, classic gold standards, interwar period, Bretton Woods system, flexible exchange rate regime, current exchange rate regime, European monetary system, fixed and flexible exchange rate regime. मैंने इसके पूरे notes बना दिए, ठीक है? So I'm going to share क्योंकि ये सारा history है. मैं क्लास में पढ़ा हूँ या आप खुद पढ़िए, it is one and the same. It is, there is nothing I am doing. इसमें ऐसा value addition जैसा कुछ नहीं होने वाला. Whatever is there, it will remain as such. You can manage it on your own. So I am definitely not going to pick this first module. I am going to give it to you where you can read. I have prepared the notes. You can go through the notes. Then I am also going to share the assignment. You can do the assignment. Once you are done with the assignment, you are through with this person. Okay? Second module. Now the second module again is about balance of payments. Fine? Now see, when we are talking about balance of payment, this is basically regarding any particular country's import and export mechanism. Fine? when we do import, we have to pay foreign exchange, isn't it? And when we do export, we have to we will be getting the foreign exchange. Now, definitely, the balance of payment idea is that how exactly you are going to balance this receipt and payment idea at the international level when you are transacting with many different countries. So if your imports are going to be more than your exports, you will definitely end up into deficit of foreign exchange. And when your exports are going to be more than your imports, then you will be having the surplus. Fine. So balance of payment is basically a mechanism through which we try to understand that how this complete idea of payments in the foreign exchange and receipts in the foreign exchange can be recorded, and after recording them, how the deficit or the surplus condition can be upheld. So actually concept is there, but besides that, you need to have an understanding regarding how the current accounts are being managed to reflect whether particular economy is having the deficit or the surplus. So in this, you need to have the clarity regarding recording of the various factors which are, yeah, who else is there? Dhananjay, you shift one table and chair here and sit. After then you go and shift one thing, one in the end and sit. Alright, so when we are talking about the balance of, so when we are talking about this balance of payment module, 90% here also the syllabus is theoretical. You have to understand the concepts which are basically that definitely the introduction topic is there which talks about what exactly is the balance of payment. Accounting principles in balance of payment. Accounting principles is nothing but to understand that when any of the exports and imports are being done in the economy, how are they supposed to be recorded? That is what the accounting principle idea is all about. When we are talking about accounting principle, definitely when you are creating your current account, you will be having two ends here, debit and credit. And you have to understand what all transactions are actually need to be debited and what all transactions are need to be credited. So this anyways we can understand whenever any export is happening, that is going to be debited, and whenever any import is going to happen, that needs to be credited because you have to make the payments. Fine. So this is how you will be. Anyways, I am going to help you in looking into that. Besides that, you have to look into valuations and timings, components of the balance of payment. That is what I am talking about. Either the surplus or the deficit positions in the balance of payment, importance and limitations of balance of payment statistics, relationship of balance of payment with other economic variables. Fine. So this is possibly going to be your second one. This one is also quite manageable. What I have thought of, once you are done with your first module, first I am going to share the material with all of you, with the assignment. Fine. In case if all of you are able to understand whatever information I am giving it to you, in case if all of you are able to understand, we will wind up with the assignment and that module is over for us. If you come to me and tell that no, I'm this current account management we are not catching that one, then I will take one session on balance of payment. So I am keeping this for the end of the session. My means when we will be getting over with this particular semester, that time I will take. ठीक है, तो ऐसे करके हमने दो modules निकाल लिए. So we are managing two modules. Now today I am going to start with the third one. Okay, so put it in your notebooks. Yes. Go in the end. Take the table and chair and sit in the end. Alright, so put the heading Module 3 International Financial Markets. Okay? So, ideally, when we are talking about this international financial markets, in this particular module, you will be trying to understand the complete exchange mechanism. Like if the transaction or if any kind of movement of money has to happen from one country to another country, how exactly it needs to be managed. Fine. So you will be looking into the motives for using international financial market, foreign exchange markets, history. अरे सब लोग इसमें आ गए हैं क्या फाइनेंस?
I was with her.
ये का टेबल एंड चेयर एंड सिट इन द टेबल चेयर वहां से उठा के लास्ट में बैठो. मतलब हमारे पास तो बहुत महान Alright, so quickly listen what all things you will be covering here in this module 3. Then I will just, Vismaya, you take the attendance sheet from me and please create the WhatsApp group dates. Because those who are missing on the classes, whatever they are getting from here, that is okay, but they have to align with the class. Whatever we are doing in the class, they also need to go with that. Then only it is going to help them also. So now in module 3, the topics that we will be covering here is foreign exchange markets, history and transactions, interpreting foreign exchange quotations. Fine. International money markets, international credit markets, international bond markets, and the comparison of international financial markets. So, in today's session, I am specifically going to give you some idea related to international market scenario, as well as I will give you an understanding regarding the quotations, find out quotes, how to really figure out the quotes, because that is something very important for us to understand. As you progress in interpreting various types of transactions at the international level, first thing that you need to have the clarity regarding is the quotes. Fine? So we will be talking about that. All friendship management you have done. मैंने actually जल्दी class start कर दिया, थोड़ा दो गले वाले दिन का time देना चाहिए. Desperation is there, seeing each other after a very long time. Fine. So when we are talking about this international financial market, what exactly are, which are the various segments that we have to really look into in the international financial markets? And it is like there is the foreign exchange market, the international money market, and international capital market, which comprises of bond markets and the stock markets. Fine. So the complete idea here is definitely related to when we are talking about the foreign exchange market is that whenever any transactions are taking place at the international level, how exactly the settlement has to happen. Fine. When we are talking about international money market, this is basically providing you the provision of maintaining the flow of money in the short term at the international level. And finally, when we are talking about the international capital market, it is definitely about all the different stock exchanges that we are having, as well as the bond provisions through which different economies can raise money from the international market. ADRs, GDRs, you must be aware of all that. Fine? Now, when we are talking about the foreign exchange market, what exactly we need to understand? It is a 24-hour market. The reason is very clear. Some or the other country is definitely transacting at some particular hour. So there is nothing like that. It closes down. It is continuously operational 24-hour market where the currencies are traded to facilitate balance of payment adjustments. Right? What exactly is the balance of payment adjustments? That is how the payments need to be settled. You require foreign exchange for that. Like suppose if some transaction has happened in India, we have imported something. Now we have rupees, but if they are asking that we want payment in dollars, then you need to go to the foreign exchange market for the conversion of rupees into dollars so that the payment can be settled. Fine. A 5 trillion per day market, most widely traded currencies include, which are those currencies?
Dollar, euro, yuan.
It is dollar, euro, yuan and pounds. Fine. So major foreign exchange centers are London, New York, Tokyo, Hong Kong, Singapore and Dubai. Fine. Other foreign exchange centers are located in the commercial cities of the countries like Bombay in India, Delhi in India. So these are important commercial cities where the foreign exchange centers are going to be located. Fine. Now, key players in the foreign exchange markets. Which are the key players? They are currency traders and foreign exchange brokers. Fine. Currency traders are those you can consider for them currency is a product, and as and when there is a demand for a particular currency in the market, they used to trade on that. Fine. So they will quote some particular exchange proportions under which the trading is going to happen. But brokers are different. Brokers are the one who definitely are making these types of arrangements, but for that they will be charging certain amount of fees. Fine? They are not looking into the profits from the buying and selling of the currency. They are specifically making the benefit out of the fee that they will be charging for the settlement of any particular transaction or for the arrangement of any particular type of currency. Clear? Now, major.
That will not be capital market. Foreign trader and other
They also are the part of the.
capital.
They are the part of the foreign exchange market, but they participate in the capital market also because in case if there is any kind of investments need to be done in the stock markets at the international level, again the conversion of the currency has to be done. Their major role is related to the conversion of the currency. Wherever you have to look into the conversion of the currencies, you definitely have to do it via these types of brokers. Fine? Now, there are other major commercial banks also which play a very important role in managing these international transactions, bank to bank transfer that we normally call as. Then there are speculators who are basically trying to gauge the market and take the benefit of the market by buying and selling any particular currency. Fine. Then there are central banks of countries. Each of the above players has its own objective for participating in the foreign exchange market. So everyone has got their own benefit. Like if we are talking about currency traders, they are trying to make profit from the trading they are doing. If we are talking about foreign exchange brokers, they will be getting some fixed amount of fee from there. If we are talking about commercial bank, they will be charging interest rates on any kind of exchanges that we are doing. So that is their benefit associated. The speculators are again trying to take the benefit from the fluctuation in the currency's value in the international market. So सबका अपना motive है, सबका अपना objective है which they really want to fulfill from this international market. Fine. The foreign exchange market allows currencies to be exchanged in order to facilitate international trade or the financial transactions. That is again the balance of payment statistics that definitely will be going through. The system for exchanging foreign currencies has evolved. So the revolution has happened from the gold standards to the agreement on the fixed exchange rates and to a floating rate system. So this is our complete evolution mechanism that how at the international level the complete trade system has evolved. So initially it was the gold standard idea that we were following on the basis of which the value of the currency is going to be decided at the international market. Then it became a fixed exchange rate idea. After that it became the floating exchange rate idea, completely dependent on the regular demand and supply of the currency in the market. Fine? Now, the first thing that we have to look at in the international market setup is the spot market. Can you tell me what is the spot market? Dhananjay? Where you to an extent he is correct. That is what the spot market is all about. So the market for immediate delivery and exchange of currencies is known as the spot market. Fine. So currency trading between the bank occurs in the interbank market. Within this market, brokers sometimes act as intermediaries because they might be bringing the buyers and sellers together. Sometimes the buyer can be an individual and seller can be a bank. Sometimes seller can be an individual, buyer can be the bank. In that way also, these brokers tend to function. The exchange rate quoted in newspapers are for the large transactions of over $1 million. So there is some kind of information we used to get via newspapers also, that those types of information that you are getting regarding the value of any particular currency, that is always going to be as per the big transactions that are happening of over $1 million. On the basis of that only, the quotes are going to be mentioned. Now see. This is something very important for all of us to keep in our mind, because when you will be getting the questions to solve, possibly there are going to be many different currencies which they might express. So you should have the clarity regarding which particular symbol indicates which particular currency. Fine? So take 1 minute and observe. So majorly, they will be using euros, dollars, yuan, yen, and German Deutschmarks also. In some of the questions, you will get English marks also. Francs, pound, lira, then dollars. In dollars, you have to be very clear whether it is a Canadian dollar or New Zealand dollars. They are also mentioning sometimes NZ. So that is also something we have to really be little particular about. Rupee anyways will come. Others, very rare chances. Maximum francs, Switzerland francs, you might get in some problems. But this is really important because see, pound and lira has got a very small variation. So that part you have to be very clear. Yuan and yen also has got a very small variation. So by looking at the symbol itself, we should be able to make out that which particular currency we are talking about. Fine? Is it clear to everybody? Now, when we are talking about the exchange idea, so what exactly is this exchange idea is all about? They are telling that when the exchange is happening between any two currencies, like first one we are talking about here, if we say that 1 euro is equal to $0.8420. What exactly I am telling here? I am telling you that 1 euro is equal to how many? It is 0.8420. So in this particular transaction, I am expressing the worth of 1 euro in dollars. In case if the question comes by how much basically is $1 equal to expressed in euros? So what exactly you are supposed to do? You are simply supposed to take the reciprocal of this. What do we mean by reciprocal? That is 1 divided by. Please try calculating. Just see whether you are getting the same answer which is given there and do it for the remaining things also. Copy में लिख के चलिए जो भी whatever we are doing keep writing. And do it for the remaining options also and see whether you are getting the same answers or not. Bhavna is not in finance. So both the semesters you have opted finance only. Four finance. All are four finance. So I hope you have got the clarity on this. So this is basically just trying to understand that from one particular currency's codes that we are getting, we can derive the code for the other currency also. Clear? So this is basically how the exchange mechanism works. So if in case I have to make the payment in euros, this is the amount of per euro, these many dollars I have to pay. But same thing if I have to identify for dollars, then I need to do the reciprocal of the same quotation to find out Clear what? Fine? So this is basically the spot item. So if you are transacting in the spot market, you are anyways concerned with this particular information, and accordingly you can identify for any possible currencies which are there in the market only by understanding in what proportion the expression is being made or the value of the currency is being defined. What exactly we have done? We have defined the value of euro in dollars, and then we define value of dollar in euros. So this is your spot market mechanism where you will identify that what exactly is the value of one currency in relation to the another, and accordingly the settlement has to happen. Fine? Now, the next thing that we have to look at is the forward market scenario. Now, forward market is another interesting mechanism in the international market because we all know that the value of the currency tends to change on the daily basis, or the exchange rate is fluctuated. It will not remain the same. But for businesses to maintain their business in such a fluctuative scenario, many a times becomes quite tedious. So to avoid that kind of a fluctuation, they tend to opt for a forward market position. Now, what exactly is this forward market idea? You are basically, suppose I am transacting today. So whatever is the value of the currency today, I will freeze that one for me for next maybe 30 days, 60 days, in which the final settlement is going to happen. Fine, so what are they telling? The forward market enables traders and funds or banks to lock in the exchange rate today at which they will buy or sell certain quantity of currency on the specified future date, which can be 30 days long, 60 days long, 90 days long, or 180 days from today. So this is somehow you are trying to safeguard yourself, because if I go with the spot market idea, so this relationship is going to change on the daily basis. So suppose if I am doing a transaction today and I have identified that 1 euro is equal to $0.8420 today, but the payment I am going to make after 30 days, there is going to be a big change in this relationship. So I have to make the payment according to that. So there is a possibility that there is going to be appreciation or depreciation in the exchange rates. So that ways to avoid that kind of a risk, what exactly we are doing? We are making use of this forward exchange market where we are freezing the particular day's exchange rate so that it is going to help you in executing transaction after a stipulated time period. So this time period also you are defining at the time of entering into the contract. Right? Yes. Definitely. Then only the particular transaction can be executed. So, and normally they agree because sometimes it is very tricky because of this present scenario, international market is heavily fluctuating. So to transact in such a situation, it is very tedious for the companies. So they tend to depend a lot on this kind of a mechanism. Fine. Now, customers in need of foreign exchange are conquered with the core competitiveness, special banking relationships, speed of execution, current market conditions, and forecasting advice. So when these types of forward agreements are being entered into, they are being taken with a well-informed kind of understanding about the market. So customers or consumers are well-informed. Their information base is supported by banks. It is being supported by how the current market conditions are there and what kind of forecasting advice they are getting. On the basis of that only they will look into entering into any kind of forward agreements. Yeah. exchange services for a fee. So if you are going to a bank and you are asking some kind of exchange of currency, bank is going to charge a fee. That is a bank's bid, that is buying quote for a foreign currency will always be less than its ask quote, that is the selling of a currency. Means what exactly I am talking about here? I am giving you two terms here. That is bid and ask. So what exactly bank is doing? When the bid quote it is putting, the bid quote is always going to be less than the ask quote. Fine? Because ask quote means bank is doing selling of the currency, and on the bid quote they are doing the purchasing of the currency. So that is what they are talking about, that a bank's bid, that is a buy quote for a foreign currency, will always be less than its ask, that is the sell. Means you can say that if bank is taking the currency from you, quoting it as 0.5, it will sell it to some other person quoting it as 0.6. It is like that. Clear? So that 0.1 difference is going to be the benefit for the bank. Clear? More often, banks rely on interbank intermediaries, which are called as foreign exchange brokers. Broker is someone who brings together a buyer and a seller without taking a position in the foreign exchange. That is, the broker simply arranges the transaction for a fee. This fee basically is the spread between what a purchaser of the foreign exchange pays and what the seller of the foreign exchange receives. Fine? So what the foreign exchange person pays is the ask price. Whatever I am going to ask you, you have to pay me that, isn't it? And what the seller of the foreign exchange receives is the bid price. Fine? So this ask and bid things you have to be very, very clear with. You should not confuse them. Clear? अभी तक समझ में आ रहा है? I hope nothing tricky we are talking about. Fine? Now. So when we are talking about this bid or ask spread, so the question that should come to your mind is that how exactly this spread is going to be identified. Ideally, what is that spread? That spread is basically the gap between bid and ask, isn't it? So what exactly we are going to identify the spread? That is ask rate minus bid rate divided by ask. It is going to help you in identifying the spread. Like we are talking about one example. Suppose the bid price for the pounds is $1.52. Means 1 pound is equal to $1.52. Ask price is 1 pound is equal to $1.60. So how much is the spread? So what exactly they have done? Simply they have taken the ask rate minus the bid rate divided by the ask. Fine? Note down this one. Note down in your copies. GDR मोबाइल अंदर रखो, इतना कुछ इम्पोर्टेंट नाम नहीं है. Everybody, all of you, please keep your mobiles inside. Unless we are, or if you are using it for calculation, it is okay. Otherwise, do not use it for reading messages. So, Prime Minister से क्यों message आता है? Done? Taken? Now. asked spread, what exactly we need to understand here? It clearly says the spread on currency quotations is positively influenced. So there are certain things जो एक gap आ रहा है currency के bid and ask rate के बीच में, because of which you are identifying the spread. It is actually happening due to certain reasons. Now, what are all these reasons? It can be the order cost, inventory cost, currency risk. All these things tend to influence the spread. That is positive influence by order costs, the inventory cost, and the currency risk. And negatively, it is influenced by competition and the volume. Fine. So when we are talking about identifying the spread between the quotations of any particular currencies, bid and ask rate, it completely depends on the positive influence on the currency as well as the negative influence on the currency. The spread for heavily traded currencies like dollars, euros, pounds are low. The spread is low because competitiveness is too high. Because of their liquidity and the bid and ask spread is normally greater for those currencies that are less frequently traded. Fine. So what exactly I am telling you? The gap between two quotations, which we call as a spread, is more for the country, for those currencies which are extensively used for trading purposes in the international market. And this spread is used to be more for the currencies which are not very often are used for the transactions in the international market. Clear? Now, let us look at one more example. Now listen this very carefully. To understand how a bid or a ask spread could affect you. Fine, हमें पता तो चलना चाहिए bid and ask की हम बात कर रहे हैं. Exactly, is it affecting us also? So they are telling that assume you have $1,000. Fine, this is something that you are having in your hands. Presently, you are in US. This is your location. Fine, and you plan to travel from the United States to UK. Now, what exactly is your plan? That you want to travel to UK. So, dollar लेके तो जा नहीं सकते. क्या चाहिए वहाँ जाएंगे तो? What do you want?
UK pounds.
Pounds you want. If you are going to UK, you want pounds. It means that now you need to get your $1,000 converted into pounds. So आप क्या करोगे? आप बैंक के पास जाओ. ठीक है ना? You will go to bank. What you will tell bank? You take my $1,000 and give me pounds equivalent to that value. Fine. Now, what are they telling? That assume further that the bank's bid rate for the British pound. So, what exactly we are telling? Bank's bid rate is $1.52 for 1 pound. ठीक है? Now, ask rate is 1.60 for 1 pound. अब सबसे पहले मुझे ये बताओ कि what are you asking for? Are you asking for something from the bank? Are you asking for something from the bank? What are you asking for? You are asking for pounds. ठीक है? So it means that because you are asking for pounds, your conversion has to happen as per the ask rate. Clear हो गया ना? Connect करो. Because you are asking for pounds, your conversion has to happen as per the ask rate. So what are they telling? Before leaving on your trip, you go to this bank to exchange dollars for pounds, and your $1,000 will be converted to 625 pounds. How the conversion is happening? Conversion is happening $1,000 divided by the ask rate for the pounds, that is 1.60. Right? It means बैंक क्या बोल रहा है कि if you really want to exchange dollars for pounds, that particular transaction is going to happen at the ask rate of 1.60 dollars. Right? So it is clearly asking you $1.60 for the conversion, and that is the reason why the conversion when happens you are getting 625 pounds. यहाँ तक समझ में आया? ध्यान से पढ़ो एक बार. Are you understanding what I am telling you? Is it clear? Now see. Now suppose that because of an emergency you cannot take the trip. नहीं जा रहे. अभी रखोगे पाउंड? क्या करोगे रख के? कोई पॉइंट नहीं है पाउंड रखने का. So you reconvert this 625 pounds back to the US dollar. अब हम क्या बोल रहे हैं? अब हम क्या आस्क करने जाएंगे बैंक से? हम आस्क करेंगे डॉलर्स. तो बैंक को हमसे क्या परचेज करना पड़ेगा? बैंक को हमसे पाउंड्स परचेज करने पड़ेंगे. क्योंकि बैंक को हमसे पाउंड्स परचेज करने पड़ेंगे, बैंक इस बार बिड रेट यूज करेगा. ठीक है? समझ में आ रही है बात? कैसे हम यूज कर रहे हैं इसको? सो व्हाट एग्जैक्टली इज गोइंग टू हैपन नाउ? द 625 pounds are going to be multiplied to $1.52 to convert it into dollars finally, because that is the price at which pounds will be purchased by the bank. ठीक है ना? Now, so how much you are getting back? They say you will be getting back only $950. $50 इस पूरे झमेले में गायब हो गए. फाइन, गायब क्यों हो गए? Due to the bid ask spread, there is a spread, there is a gap between this bid and ask rate, because of the bid ask rate 1.60 है, bid rate 1.52 है, there is a difference between your bid and ask rate. Because of that, you have 5% less, that is $50 less than what you started with. So obviously the dollar amount of the loss would be larger if you originally converted more than $1,000 into the pound. So जितना ज़्यादा बड़े pound का conversion करोगे, उतना spread बढ़ता जाएगा और उतना गैप की वजह से आपको लॉस होगा. अभी $1,000 था तो $50 हमने यूज किया. अगर वो $2,000 होगा तो हम $100 यूज. Is this bid and ask idea clear to everybody? You are catching up on this? Fine. Now, the next thing that we are going to talk about here is the foreign exchange quotations. That is what is one of the topics in your syllabus also. What are they talking about the quotations? They are telling that exchange rate quotations published in the newspapers normally reflect the ask price for the large transactions. Why ask price? Because you will be taking the currency and asking for some other currency on the basis of the exchange rate which is being published in the newspaper. जैसे अगर मेरे पास डॉलर्स है, तो मुझे आस्क प्राइस देखना है डॉलर को पाउंड में कन्वर्ट करना या डॉलर को फ्रैंक्स में कन्वर्ट करने का, क्योंकि मैं डॉलर से डॉलर तो नहीं लूंगी ना जाके. With dollar, I will definitely ask for some other currency. So I need to look at the ask price. Normally the quotes that are being given in the newspaper are the ask quotes. Right? समझ में आ रही बात क्योंकि उनको भी पता है कि if you have any particular currency, you will be asking for some other currency. So for your interest, it is the ask. Is it clear? Your understanding? Now, direct quotations. They represent the value of a foreign currency in dollars. Represent the number of units of a foreign currency per dollar. Fine. So now when we are talking about direct quotes, so we are having two types of quotations. We are having direct quotes and indirect quotes. Fine. So we are having two types of quotes, that is direct quotes and indirect quotes. When we are talking about direct quotes, what exactly it is representing? Value of a foreign currency in dollars. Fine. What do we mean by that? 1 pound equal to how many dollars? Fine. This is what we are talking about. Once again, I am repeating. Please listen. Value of a foreign currency in dollars. So when I say value of a foreign currency in dollars, this is a foreign currency. How much is the value of this currency in dollars? Whenever this kind of expression you are getting, you are actually getting an direct quote. Fine. Now what exactly is the indirect quote? तुम लोगों ने अभी किया ही है, ठीक है ना? Indirect quote is simply the reciprocal of this. So reciprocal of this means what are we trying to identify? In the reciprocal, when we are doing the reciprocal of the direct quote and we are getting the indirect quote, what exactly I am trying to identify? I am trying to identify $1 value in how many pounds. Observe this very carefully. Are you getting what the stories I am telling you today or some bouncer class? Bouncer नहीं जाना चाहिए, catch करना है आपको. Because you have to go very fast. आज का क्लास तो बहुत ही slow चल रहा है. ठीक है ना?
Like what is it? Like after the ask me, I will get pounds in US. After going to UK, I will change there to US dollar.
तो वहाँ उनका बिडेन आस्क होगा.
Competing.
क्यों? वहाँ पे आप बैंक के पास ही जाओगे ना. तो वहाँ पर उस बैंक का अपना बिडेन आस्क होगा ना कि वो पाउंड्स के बदले कितना डॉलर देते हैं. See, right now you are in US. When you are in US, you want to travel to UK. Fine. So you are going to the US bank asking for the different currency. Same thing if you are in UK and you are asking besides pounds for the dollars, again bid and ask. How without bid and ask transactions?
Because I have pounds, right?
तो वहाँ तो जाओगे नहीं जब तुम्हारे पास पाउंड है तो अपना सारा ट्रांजैक्शन वहाँ पे पाउंड्स में करोगे ना. तुम वहाँ बैंक के पास कब जाओगे जब तुम्हें पाउंड्स को डॉलर्स में कन्वर्ट करना. ठीक है ना? क्यों नहीं होगा वो कन्वर्ट करना? इसे कैंसिल कर दो. इस पे कैंसिल कर दो. 1 पाउंड के बदले कितने डॉलर्स देंगे? नहीं, उनके पास पाउंड्स है. यहाँ पे हमारे पास भी तो डॉलर्स थे. Oh, you cannot ignore that. Okay? Yes, class, are you all clear till here? So we will hold the class and I will share some material. अभी तक समझ में आ गया whatever things we have spoken in the class today? Is it clear to everybody? Alright. And I will share reference की book also I will share with all of you. वैसे मुझे भी पता है कि आप लोग अभी कितना पढ़ने के मूड में हो.